In short, we can divide them into 5 buckets. 1, you don't have an appropriate and solid trading plan. 2, you lack risk management skills. 3, you lack discipline, aka shiny object syndrome. 4, you overcomplicate things or have analysis paralysis. And 5, you remain static or don't adapt to the trading environment. If you want to know more details, you'll want to stay till the end of this video. You're doomed to fail if you don't have a trading plan. A trading plan is essential for success in any market, and the options market is no exception. Without a trading plan, you have no roadmap to follow and no way to measure your progress. You'll constantly be second-guessing yourself and making decisions based on emotion rather than logic. That's a recipe for disaster. Your trading plan should outline investment goals, risk tolerance, and strategies for entering and exiting trades. It should be specific and actionable so that you can refer to it regularly and hold yourself accountable. Yet, it should be flexible to evolve as your knowledge and experience grow. It should be dynamic so that you can adjust to changing market conditions. You must commit to your trading plan 100% and review it frequently. Say at least once per week to ensure that everything is in order. Some guiding questions to consider when choosing a trading strategies are: can you explain the strategy in simple terms? Do you understand where you have an edge in the market? Do you have evidence that the strategy has been profitable in the past? Can you prove that it is likely to remain profitable in the near future? And some questions on the personal side: how does this strategy align with your investment goals? Does this strategy is suitable for your capital and trading skills? Are you comfortable with its risk profile? Are you a part-time trader, or can you afford to stay focused on your trading full-time? If you don't follow a trading plan, now is the time to create one. It will be the foundation of your success as an options trader. But hold on, cowboy. Now that you have a plan, you have to ensure that you won't blow it up. If you're not cut out for managing risks, trading options is not the game for you. Unfortunately, many people enter the world of options thinking they'll make a fortune by buying calls or puts deep out of the money in stocks that they don't understand and or haven't checked their financials. In reality is that without risk management skills, you're more likely to lose your shirt than making a killing. Most traders have a position size that is way too high compared to their dollar value of their portfolio. Say positions that individually exceed 5% of your total portfolio. And that only applies when you can identify the max loss of your trade. No wonder why experienced traders constantly reminds us to first master risk-defined trades. Some examples are verticals, iron condors, and butterflies, to name a few. For undefined risk trades, you can use several statistical measures to guide you in assessing the likely move in an asset period like a week or a month. These tools and your judgment are critical when making more aggressive trades. When you let your greediness guide your trades, you might make the type of mistakes that are too costly to your bottom line. Other simple but often neglected factors are the expiration date and possible assignment. Messy traders often overlook how these two factors determine what can they do when things go down south. For example, you're an option writer and your position is already deep in the money. It can be much harder to fix your position, especially if you're closer to the expiration date. Likewise, as you're approaching the expiration date, the extrinsic value of the option decays, and the more it makes sense to exercise the option when it is in the money. I can talk for a full-length movie about everything that can affect your options trading. But the idea is that if you know the risks embedded with your strategy so that one trade or a series of trades at any given time won't kick you out of the game. Consider it being hit with a small go-kart, not a bullet train at full speed. Do you follow a specific system to manage your risk? Please share it down with us in the comments. Risk management is part of your habits as a trader, which brings us to the next topic. One of the most common mistakes people make regarding trading options is lacking discipline. This often manifests as shiny object syndrome, where traders constantly chase the latest hot stock or jump from one strategy to another without giving any of them a fair chance to work. If you want to be successful at trading options, you must find a system or approach that you're comfortable with and stick with it. That doesn't mean you can never change things up, but it does mean that you need to be disciplined enough to give new ideas a chance to prove themselves before moving on. In the same logic, be honest and ask yourself, are you doing extensive market research? What opportunities can you identify? How can you set up the appropriate trade for this period? Are you still aligned with your goals? What do you have in mind of an exit strategy? These are all essential parts of your discipline as a trader. One of the best ways to overcome shiny object syndrome is to have a teacher, or at least joining a trading community who can help keep you focused and learning. Along with risk management, your understanding of the marketplace will make you or break you as a successful trader. To grow as a trader, you'll spend time discovering all different market scenarios, various trends, and changes in the marketplace. So, take your time and make gradual improvements as you master the basics, but not so much time that you'll never take the next step. If you constantly overanalyze your trades and second guess your decisions, you're likely suffering from analysis paralysis. Unfortunately, this is a common problem among new traders who often feel they need to have perfect market knowledge before entering a trade. When you try to analyze everything too closely, you often miss out on the big picture and ironically end up making bad decisions. One of the best ways to avoid overcomplicating things is a mixture of what I've mentioned. That is, to have a clear and concise trading plan. In the end, this outlines your goals, strategies, and risk management rules. And by developing discipline and following your plan, you can stay focused on what's important and avoid getting bogged down in minutiae. You might be thinking, hey, you just repeated yourself to make a point. Don't worry, it has a purpose. Traders that fail with this step are always concerned with the technical side of trading, with the nuts and bolts of their strategy, with the nitty-gritty of the market that they often neglect what's going on in here. If you want to avoid overcomplicating things, you must leave mental space to focus on the process, not always the outcome. In other words, don't worry so much about whether every single trade is a winner or loser, especially when you haven't set a trade in your life. The reality is that no one has perfect knowledge of the market, and even experienced traders make losing trades from time to time. Hey, I'm no exception. The key is to have the magical crystal ball that will tell you where the price of OnlyFans will go, but also a trading plan you're confident to follow and stick to despite things going against you. Overcomplicating your trading strategy will only lead to more confusion and more losses. So, fear not, as there are things that you will learn and improve just as you fail and adapt to the trading environment. This brings us to the last point. If you don't adapt to the trading environment, you will likely fail at options trading. While markets are constantly changing and evolving, if you don't change with them, you will be left behind. So, always be willing to learn and adapt. There's always something new to learn, whether a new strategy or a better way to use the tools at your disposal. It also helps if you're open-minded and you're willing to change your approach when necessary. The competition grows, spreads can get narrower, and you can expect constant regime changes, whether they are based on regulation or macroeconomic events. What used to make bank yesterday can be a drag today. Sometimes your overall strategy may need something entirely new, and others are just back to basics. Additionally, you need to quickly adapt to new situations as they arise, since black swan events are inevitable, but fortunately they also bring opportunities with them. That's why I believe that if you want to take trading as a serious path, you should interact with other people in the industries and listen to different points of view. I started my journey almost 3 years ago, first at the institutional level and currently as an independent trader. So I can confirm that you get to learn something new every day. Moreover, I'm humble enough to realize that there are still plenty of things to learn and master. But I hope this small list of principles guides your trading journey. Whether you find another motivation to engage with other traders, sharpen your risk management skills, or look closer into finance as a hobby, this video is for you. Moreover, if you want to know what risks in options trading you're exposing yourself to, you should check this video. Dear viewer, this is Eric from Markats, and I hope to see you in the next video.